Hello traders, welcome back to my channel. So in today's video, I thought I would tackle a topic that is really popular with price action traders. It's a concept that's been very popularized, even though there's many different ways to call this. The most common name you hear this thrown around is order blocks, which was popularized by ICT, the inner circle trader. But I mean, as you're gonna see, this is nothing really new that was invented. This all has to do just with supply and demand in the market, with gaps and just price coming back into previous areas of acceptance and volumes, etc. So we're talking obviously about the concept of order blocks. Now, in this video, I'm going to show you basically how I interpret them or how I use them in my trading. And remember, my number one strategy for trading, or my number one tool, has always been volume profile, but this relates and fits into the whole volume profile theme, along, like I said, with concepts of supply and demand traders, etc. So let's just start off with a basic diagram of what a order block is. So basically, if we're coming here in an uptrend, we're just watching for price to have an impulsive move that breaks out. In this case, if we're in an uptrend, then we're observing a market that has higher highs, higher lows. So one thing that a lot of people make a mistake with is you see little clusters and order and blocks everywhere on the chart on all time frames, but you want to be aware of the location of this. If we're in an uptrend, then we obviously want to focus on entering on areas where we're pulling back on a retracement back into a previous broken swing area, as this is the ones that give us the best risk reward scenario. So in the case of the bullish order block, we have some kind of candle or consolidation here that pushed down. Sellers take over, buyers take over in this case, and they absorb all the selling that's going on here at the bottom, and they're able to push price up. We break a previous swing high, and then we look to get back in on a retracement into the area where price released, basically where we formed the gap right on the breakout of this. One of the steps that ICT mentions, and you can see all his mentorship material for free on YouTube that he published last year. But one of the things I noticed he said is that he looks for a previous swing low here to just be violated and then have that push up here. And then once we push up above this high here that caused the rate of the low here, then once we close above that on whatever time frame we're using, that's when it's confirmed, and then that's where you see pullbacks into here. But I also want to see us breaking above a significant swing. But again, this rule, I don't necessarily apply it, but it's a step in a confirmation that what it gives you is a sense that this move gets traders in the wrong side thinking this is going to go down, and it traps traders, and then that adds fuel into the squeeze on the other direction. And then, if we break market structure here on the upside, when price is coming down, what we're basically having is all the sellers here that are trapped, that were on the wrong side before this broke out, they see price coming back into their original area where they sold. So they're going to want to close out their trade. And that closing of a short is just going to add fuel to the buying side. Plus, traders that saw the market rally away and missed out on this move when it's coming back, they know that this is an area where we had big blocks of orders and absorption from limit orders, taking in all that aggressive selling, and we're able to just push this up. So when this comes back down, all the limit resting orders that were left here waiting, that were not filled yet, are going to be here waiting for an opportunity to then get back in and then continue again the trending movement up. Okay, and the bearish order block, basically the same thing in reverse. We have a market, in this case, let's say it's trending down. Then we have a consolidation here, a candle or series of candles, depending what time frame you're looking at. And then we have a move up that then causes an impulsive move down that breaks this market structure to the downside. So now we just wait for price to come back into that release point or that last cluster right before the gap happened. And then you look to get in short right back into this supply area with your stop loss just beyond the swing high that we formed in this case. And again, it's important, the location, and we want to see a break in market structure to the downside and take a trade with the trend. So in this case, we're looking for downtrends. So we're basically just looking to join on pullbacks and then continue on the downside, okay? And in this case too, another tool is like the Fibonacci tool. This is another thing that ICT uses a lot, where he calls the optimal trade entry, which is basically looking for this sweet spot between 61.8 and 78.6 here. And this area generally presents a really nice pullback opportunity within this range once we see that it also lines up with the cluster before we went up. Now, as far as candles, you know, it can be one candle or a series of candles overlapping each other. If I see a series of candles and they're all like around the same level, like this, for example, then I would just take the whole cluster of them. Or maybe you want to go up on a time frame and then all these candles might be just consolidated into one main candle, etc. And if we have a big candle body with small wicks, then I will tend to draw the block just using the candle body. But if we have little bodies with big wicks, then usually in this case, let's say this is a last push down that then goes up, then I will generally take the wick as well and then the body. If you want to be very conservative, you can just take the whole thing as your block, all the wicks and the bodies all together. Or you can just focus, like I said, on like the body and the top side of the candle in this case, if we're looking for a bullish order block to push back in. And another thing, if you want to refine entries even more, and this is especially useful if, let's say, you're looking at an order block on a weekly time frame, then you can take the body and mark out a fib with a 50% line, meaning the midway point of this block, and then drill down into the daily, for example. And then when the market, in this case, let's say they go down and we're pulling back up into this order block, you can drill down, and generally the 50% level is going to be a pretty precise entry point and is going to let you have a tighter risk reward. Because if you do a trade like this, in this case, we put our stop loss behind the wick. So then your entry would be here, your stop loss would be here, versus if you're just taking the whole block like this, let's say your entry would be here, but your stop will still be here. So then you can see your risk reward would be reduced. So with this, you can just try to have a tighter stop. And another thing too is you can also drill down just in lower time frames, as we're going to see in the examples later. and just try to refine your entries by using order blocks on lower time frames. Okay, so that's pretty much sort of the theory again of what an order block is in general. And let's say the way I use this, for example, I mean, if you're using volume profile, you know that high volume nodes on the profile are areas where price has accumulated volume. So in this case, when you have these clusters before price breaks out, this is basically a high volume node forming on the profile. Then we take off, and when we come back, we're retesting the edges of the high volume node, which is exactly the areas where I like to go in on the profile. So again, you can see how this is related really to a lot of different styles of trading. It's just different ways of looking at the same thing, but this is just basically like the terminology that ICT started using for it. Okay, so let's just go over several examples in different markets and its different time frames. So let's look at examples in Euro US dollar. So you can see right here. Oh, and I should note there's two different ways that I look at this as well. Two different ways that I look at this order blocks is either like this, where you have a reversal, let's say from a top, and then we reverse the whole trend for a new price leg or trend downwards. Or if you're having a very bullish market, let's say, and you have a little consolidation and then you take off, then I also mark out there's blocks within impulsive moves. Basically price rallies, we have a little rest, maybe we have a little pattern like a wedge or a rectangle, etc., and then we push up again. Then I'll take this as well as just an opportunity to get back on a retracement to continue with the trend. So I see them both at tops and bottoms, and also as like midway pivot points within the trend. So like, for example, here, I hadn't actually marked this one, but you can see like right here, for example, we had the market was sort of chopping within this area. You can see a very clear zone of resistance. We break out. This was the last move down, the last daily candle down before we break out. And we break above this swing highs, and then we just retraced back into this block here, and you can see we just went just past the 50% of this, and then we take off from there. Okay, so the location again is very important as well. You want to get in at logical levels with the trend. So let's continue with the examples here. So the first one we have here is this one right here. You can see price is in a strong uptrend. We come up and we actually have here sort of a triple drive pattern, which is one of my favorite reversal patterns, where we make three continuous stabs, in this case upward. And then you can see right here at the end, we actually have the rate of this highs. Right over here we have this previous high, then we have this three series of candles, which I'm marking all of them because they're all overlapping. However, you know, some people would just mark out, for example, this top candle, which, as you can see, did not give us a retest right here, but right over here it gave us a really exact entry right over there. But let's say you want to take a little bit more, the way I like to do it more as a whole zone. And so you can see right here, I take this three overlapping daily candles, which is the last move up. We break above this high, immediately come down. And then right on this candle here, once we close below this lows here, that is already confirmed the block. But let's say that you want to have more confirmation of market structure break. Well, we can wait for this low to break, which breaks right over here. And we even break this lows right over here. And so now we're pulling back and we're coming into the block. And then you can see we get a very nice entry right there. We leave a bearish pin bar candle here. And then market just goes down from there. And we've already broken the structure here from this lows, and this lows as well that we had formed. And here, if we put a Fibonacci retracement, you can see that was right in between the 6180 and the 71 and the 7860 level right here. And then even later on, you can see as well, we come back again right around the 50% from this order block and right into about the 78.6 right here. And then we continue down. And then in this case, your stop loss would always just go right beyond the last swing before the impulsive move happened. And as far as your target, well, that's going to be based, on previous price action. In this case, this move down, I would first target this low, which was the most obvious and significant swing low before we started this whole leg up here. Because if we're making now a lower high, then we're going to expect the lower low. So we expect these lows to be broken here. Okay? So that is the first example. Here's another example of what I was telling you of an order block in the middle of a strong trending move, in this case down. We're clearly in a downtrend. We have this significant swing low here. And you can see this candle, we have the last push up before we come and we make this impulsive move down. We break below this. And then in this case, we just mark the block and price just comes back, retests into here, and then just takes off. And again, if we apply a Fibonacci into this, you can see, again, this was right between 6180 and 7860. And then again, same thing. First logical target is going to be this lows right here. Our stop loss would go right there. Or, we can just scale out, maybe close part of the position at those lows and let a little bit run. Or, we just zoom out and look at what's to the left of the chart. You can see here we have this whole cluster right here. So then this could be another logical level to take profits if we expect this low now to be broken and we have this whole impulsive move and this gap to fill as well into here. Okay, so those are examples on Euro US dollar on the daily chart. If we go now into gold, this is a 15-minute chart. Let's see some examples right over here. And again, this is another topping order block formed at the top of a trending move where we start a new leg or a new trend down on the 15-minute time frame. And you can see right here, price is pretty much just sort of chopping sideways here. And then we have this candle up. We break above this high, close below. And then right afterwards, we have this impulsive move down. If we had come back into this, I would have not yet tried to short this because we have not broken market structure to the downside. So we could potentially be putting in a higher low and then just continue pushing up. But once I see that we break below here, and we break below these lows, now I see that market structure has definitely broken and shifted down here. And then we have this little gap to fill as well. And then you can see price comes, spikes right into the block, and then rejects. And then same thing here. We start chopping sideways. Then we have this two overlapping candles, last cluster or last push up before we have this impulse down. We break market structure down here. We also almost break these lows. We didn't quite break the lows in this case, but we did break this ones. And then right here on this candle, we do break below all these lows. So then here, you can see we did come over here, depending how tight your stop is. This could have taken you out. But I mean, again, look at the impulse of this. This was probably a news-driven move here. So in cases like these, I just wanted to show you, you know, this is not 100% effective. Sometimes you will get wick through. In this case, this is invalidated. And I mean, if I see a market impulsively coming like this, look at this. This is like 10 green candles in a row. That's probably not a level that you just want to try to fade or get in front of. Okay, then let's go into NQ, the NASDAQ, on the 1 hour chart. And here, again, we have a order block right here. I believe this was an event-driven move because, again, look at how impulsive this is. This is not, ideal conditions to try to just scalp or get in. But I just wanted to show how even on this highly volatile moves, a lot of these levels are respected. In this case, we also have this trend line. So we do have confluence of maybe some retests here. And then you can see right here, impulse, we have this last push up here. We rate this highs and close back in. Then very strong move down, break below all these lows. Then we start pushing back. And then right here, you can see right into the 50% exactly from this block. And then, we chop. We actually 3 times tested this. But then again, this is good for like quick scalps. But as you can see right here, once we start putting in a higher low here, then obviously it's looking like this is not going to keep holding on multiple hits. And then you can see eventually we just go through right here. But we did get this opportunity on this first entry to just catch this for an impulsive move down here. Then if we go into Forex on the dollar yen, we have here a few examples on the weekly time frame. So this is a higher time frame. So again, this is an example what I said when we have a strong move, consolidation, and then we continue. And you can see we moved up. Then we have 3 continuous weekly candles down before we break out on this one. And then we have a retest coming back. And again, if you have a breakout, and immediately market comes back into it, that's not really a good reversal for me to get in. But if we get a nice rounded retest like this puts the odds a lot better that this level might hold. And then you can see right here, you take your entry, your stop loss right below this. First target will be at the previous highs. And then, you can leave some running for other targets based on, action on the left of the chart. Then right here, you can see in this case, we have another topping pattern in this case, impulsive move up, we push up, come down, and now you can see we're starting to put lower highs, and then right on this move here, we break down from all this swing lows. We also break this swing low here. So then we have these two overlapping candles, the last push up that caused the impulse move down. So we know once we start reversing, first of all, we have a very clear target on this gap and this broken support. Now it's clean and untested. And then when we pull back here, then you can see, you know, if we take the Fips right here, you can see we, from the box, well, in this case, I'm not taking into account the top wicks. We could even, let me clear this. When I'm using higher time frames, I generally don't use the wicks unless we have tiny candle bodies. In this case, you can see we have two pretty large candles. So the 50%, we barely missed it here. We didn't get to the 50% there. But then if we want to refine this, so let's say we entered right here, stop right here. But if we want to refine this further, we can go down into a daily. And then if we go back into that same one, you can see that right here, this is the weekly block. And then right here, this is the daily block. Because over here, the last cluster of up candles that we had was this right here. So instead of our entry being here, we could have refined it here with the daily, and we could have put the stop at the same place. So you can see by drilling down, you can get better and better entries. I mean, up to a certain degree, you know, you don't want to be looking at an order block on like an hourly chart and then try to go in on like a 1 minute, because that might be a little too, you know, refined. Then right here, if we go back on the weekly, you can see again in this case, we have the last push down that caused this impulsive move up to come. We fill this into this broken support turn resistance. We come down and then we retest, push up, and you can see we actually work for 3 continuous bounces on this. But remember, the more it gets hit, then the weaker it becomes. And if you see that you're making lower and lower highs, then, you know, probably I would have not taken it right here, just because it looks like it's compressing right into this level, okay? And then to finish off, we're gonna see an example here on Bitcoin. You can see we had this impulsive move up. And again, here we can apply a volume profile just to see what I was talking about with the confluence. So what do we see here? Impulsive move. We have a cluster here. This is the last down candle before we continue breaking out here. We have a high volume node here. So when we pull back, we're basically pulling back into this edge here and this huge previous level of resistance. So we're just pulling back right into the last move down that broke out, and we broke above all this previous swing high, shifting structure further up. And then we just look for our retracement here. And in this case, you know, we can take our Fibonacci, and you can see right here, right between 6180 and 78.6. And then we continue up. In this case, you know, we target the previous high, and we also look to this previous highs on this level as well. And I will be also observing, the next high volume node here, right around the edge here of resistance. And if we want to refine it too, then we can drill down into the hourly. And you can see how here we have a bias on the daily chart because we have this bullish order block from the daily chart and we have this gap here to fill into this. So what we can do is drill down, and let's look at this area now on the 1 hour chart by drilling down into the hourly and then looking for bullish setups right into this area, knowing that our macro high time frame is leaning towards pullbacks to get long into. So if we zoom in here, we can see we had several bullish order block opportunities here. We're coming down. Remember, this whole gray area is a major daily order block. We come down here. We have this little pushes down. We start bouncing. We have this swing low. And then you can see right here on this 3 candles right here, we have 3 continuous pushes down. We raid underneath this low and close back in. And then right here on this candle, we break market structure up. And then we start going up. And then right here on this red candle, we dip right into this and then pull back. Then on the very next candle again, we dip back again and take off. So now we formed another order block here. You can see again, we had a low, we raid the low, close back in, then we have an impulsive move, we break market structure up, and then on this very next candle, you can see just a very quick wick right into our box, and then we just continue up. But this is a really good example of how you take your daily time frame. In this case, this is a bullish demand area where you're expecting support, and then you drill down into a lower time frame, and then you look for clues like this. Last move down before a push up that shifts market structure right here and right here. And then we're just basically pulling back now into these blocks that we're forming. And we're just continuing with the trend right here. Okay? And as a last example here, we have examples, but to the downside, you can see how market here is just chopping, compressing down. We have a clear area here of support. We have this wick up right through this previous high. We raided, we close back down, and then this whole, I'm taking the whole cluster of green candles here in this consolidation before the impulse move down, breaks market structure, and now we pull back right exactly into this. We pull back down again. We get a deeper pullback here, which our stop in this case would have been, just beyond this highs here. Or, well, if you want to be more aggressive, right behind the box, then we push down. And then same thing here. Now we have this swing high. We come up on this candle. We push up right through this high, close back down. And then right here, I wouldn't take this yet because we're sort of chopping here. But right when we get this candle, now we broke this swing low. And then you can see we just have a pullback right into this supply here, the last push up before we started going down and the wick that rated or broke this level and closed back above. So we had our fake out here. And same thing, you can grab your Fibonacci right here. And you can see again, right in between the 7160, the 6180 and the 7860. And then in this case, we have a strong reaction down. And right now, price is live, we are here, but I've marked off this area now. This is the last cluster of candles that push up before this whole move down, which we have not yet filled back in. We broke all the structure here to the downside. So now we come up, I would expect a bearish retest here. Our stops will be just beyond this highs, etc. Okay, so that's pretty much it for the video. Again, this is how I interpret and how I look to trade this order blocks or demand supply blocks, whatever you want to call them, using my principles of price action. But also, like I said, I don't trade this on its own. I combine this with a volume profile. Also, when I'm day trading, I also look for order flow. I look at the footprint chart for trap traders, levels of absorption, etc. All those different factors that play into this. But I hope this video has been helpful, and I will see you all in the next video. Make sure to subscribe, hit the thumbs up, and leave any questions or comments down below.